everyone. It's a pleasure to welcome you this evening. Thank you so much for joining us, Robbie. Really appreciate your time. Dave, back on the stage. That's a hard act to follow, but I'm sure we're going to have a lot to discuss in this fireside chat. So first and foremost, we've talked already about AI, how that's been a dominating force not only this year, but in previous years at WEF and Davos Lake. So Robbie, from you, where does AI generally fit into the Web3 theme? Where is it native, and maybe where doesn't it fit?
So I think obviously AI is going to sort of permeate everything. Sure. And as Yad alluded to before, I think we think of this in terms of agents executing commerce for us, and also AI having to interact with tokens, because tokenization is a natural language, digital language for which we will exchange value. So I think the precondition for AI and agentic commerce is that we have to tokenize things first, so there's a language for the AI agents to use. But I also think that there's a much less sexy side of AI that we don't talk about that much, which is that none of us actually trust AI in its current form. It's highly unreliable, with most of the AI chatbots that we use and such. And so it would be wonderful if there was a technology out there that allowed us to have a permanent, decentralized proof of provenance and a record of how AI executes its logic. So I think this is also where cryptography and blockchain comes in.
I couldn't agree more. I would say almost the same thing, just using my own words, is complementary technology. Mm-hmm. On one hand, you have artificial intelligence, which is creating efficiencies and speeding up the opportunity for investors to see return on their investment. But what you don't want is to have that move so quickly that something breaks. And that's where we see that blockchain technology is coming in and supporting that there is authentication, transparency, and I think that those two ensure that we're not moving so quick that we're seeing financial returns to a point that we're going to actually take a step backwards.
Definitely. I think there's a world where they converge naturally, that one is not eclipsing the other. And that's what we're seeing in the deal flow and what Animoca and CVVC are sealing when we're assessing projects in our portfolio. And speaking of which, this has been a very hot year for IPOs. So a growing list of crypto companies that have gone public in the US, so such as Coinbase, Circle, Bullish, you name it. It's there. So, Robbie, you have a planned merger IPO via the NASDAQ. You've also been awarded and given the green light in the UAE for an regulated operated fund there. So what does that look like for you moving forward? Like, what areas are particularly hot other than UAE and US, and how do those converge with the overall theme?
So I think regulation is always something that we all welcome, because I think it allows us to have access to wider audiences. And one of the dreams that I think we've all had in getting into this area of blockchain and decentralized finance, et cetera, is that we can broaden and increase access to all of the wonderful financialization opportunities that we enjoy. And so part of that is, how do we base ourselves in different jurisdictions and take advantage of local regulations to be able to distribute our products and our opportunities as broadly as possible. And so I think that's one of the activities, because of course, as we see, so-called TradFi now starting to come into the world of blockchain and tokenization, obviously there's a certain set of preconditions of the kind of companies and platforms that they need to interact with. And there are standards, and there is legacy and history there, and it's there for a reason. And so we need to figure out how we can bridge those two worlds to maximize the effectiveness.
Definitely. And Dave, to that point, we know at CVVC we work with a lot of institutional players, and we consider ourselves a real bridge between those DeFi founders, but also have the gravitas and legitimacy from well-known organizations. Would you say that moving forward, that's essential for any company to have legitimacy in the market through an IPO or things of that sort, or is that still a gray area?
I don't know that it would take an IPO to have legitimacy, but one thing that I do like that we're seeing is, if we see an increase in IPOs within our industry, this is a confirmation that this technology is no longer emerging; it's here.
Right.
And I think that's very exciting, because for years, many of the faces that I recognize in this room right now, we've been sitting on these stages and we've been pitching to companies or investors and trying to get them to understand that, hey, this technology is the future, and now we're Now we're explaining to everybody that it's already in your everyday life. It's already creating value. You just don't know it. And the most valuable aspect of this technology is not what you're seeing in the mainstream media. But I do think that it is exciting to see that there is IPO activity within this industry.
Yeah, definitely. I mean, I think anecdotally, we all talk about how when it hits the mainstream media, people get it, and the mainstream adoption it just naturally follows. But focusing on that, two hot button issues are often things that we hear in the news to date are RWA and stablecoin. Stablecoin especially has been huge. Now, I understand, Robbie, that Animoca Brands has really been doubling down on this narrative. You also have another initiative where you have a new fund in place that you're doubling down on mid-stage, later stage deals. So what does that look for you in a renewed change of direction?
Sure. I think, again, it's part of the maturation of the space. We want to be everywhere where people are interested in tokenization, and we see that at all levels. So we started out as, as an owner-operator, I guess, making consumer entertainment products for people. That was our history. And then as we grew in this industry, we started to work with institutions. We started to have institutional distribution, retail distribution, and now we think about how we can just most effectively connect pools of capital and people who desire investments across all asset classes. Because one of the beautiful things about blockchain, we don't talk about this much anymore, but like 4 or 5 years ago, we were all talking about multi-chain. Remember multi-chain, guys?
Yeah. Not too
and
long
how
ago.
you need to be able to have your assets work everywhere. And that's one of the dreams of tokenization, that, you can have this thing and it can be, and you can give it to anybody else in the world. And that includes whether it's an institutional product or a retail product. Like, Evan mentioned our Nuva project. The idea is to take these US home equity loans that are essentially only in the hands of multi-trillion-dollar fund managers and give access to retail mom and pops on the street, 9% steady annual yield, because normally they don't get the opportunity to access those kind of investment grade, instruments.
Right, and I understand privacy and decentralized identity are also important facets, and you have a number of projects that are being incubated in-house. Can you tell us more about
Yeah, so privacy is a big one for us. And I know, obviously, we're in Switzerland, the home of privacy.
Yeah.
And this is important because, again, thinking back to our roots of why we all started in the blockchain business, we got into it because of decentralization and privacy and, most importantly, data ownership. And so we think this is a really, really important mission to say, look, it's not just good for individuals to take back control of our own data, it's actually really good for businesses. Because right now, if I'm a business and I have a website and you come to my website, I have to ask you for your email. I have to try to scrape all the, I have to try to trick you in every way possible to give me a bunch of data so I can start to slowly build a profile. Well, what if we just all showed up to websites bringing all our own data with us and said, okay, I consent. I want to buy a pair of shoes. Here's my entire life history of every pair of shoes I've ever bought so that you can cater to me and tailor your services to me properly. If I would be happy to share all that information if I was the one in control of it. So I think this, sort of taking back control of data and information because we have a really, really cheap way to do it now on the blockchain is very exciting.
Yeah, that is a very exciting proposition. And just getting back to the stablecoin discussion, because I know that certainly within our portfolio, we have a number of stablecoin players and issuers at hand. We have our own micro fund in Africa where we look at a lot of those deals. Dave, can you touch upon some of that?
It's a very exciting time for us. It was just a few years ago, stablecoins wasn't the exciting or even the sexy aspect. But when it comes to our investment strategy at CVVC, we have always said utility over speculation. And for us, what that has meant is investing in companies that are building at the application layer. Now, stablecoins is not a company itself, but when you're looking back at a few years ago where there was a lot of speculation around, is this really going to become mainstream? And now we're at a point where stablecoins are settling more than $3 trillion a day and beginning to rival the US automated clearinghouse. Yeah, it's mainstream, and it's, I think, something that you could look at, is it a 2026 topic or 2027, that the critical financial infrastructure is going to be completely changed by stablecoins. And as it relates to our strategy, as you mentioned with Africa, so we're a global investor and we operate 3 funds. We have 2 global funds and 1 micro fund that's focused on investing early stage into the African continent. And there's a lot of fintech companies that we're seeing that we're deploying capital into, and many of them are building economies from new technologies, emerging technologies, just by using a cell phone. Stablecoins is a huge use case for this, and we're seeing this rate of adoption so much more in Africa, but also other emerging markets. And I think that this is a really, really attractive and exciting area for these technologies that we're talking about.
Yeah, completely. Cannot agree more. And Dave, I'd love your thoughts on this as well while I have you. Is certainly working in the blockchain space, there's always an element of uncertainty. So we go through volatility, dips and lows, highs. We would love to see a high on the rise. So are there any preconceptions you've had in the last few years that you've been pleasantly surprised by, or anything that's changed dramatically in your thought process there?
The price of Bitcoin, and I'm prepared to be completely wrong about that again. But
are you putting a number on it?
No, absolutely not. No. It's going to take a lot more wine for that to happen. But I do think that, I think you touched on it before, Robbie, that it could be a topic that we see in 2026 as you begin to see consolidation within our industry, right? We're talking about IPOs, the capital markets engines in the United States, that will trickle down to the other markets. And we'll see that there is economic activity where we will see consolidation and obtaining market share within our own industry. So I think that that's something that is going to happen over time. How it exactly happens, who are the winners, I think no one can really know.
Yeah, no, I totally agree with that. I mean, you're going to start seeing more like L1s and L2s acquire wallets and middleware, and like people are going to vertically integrate their stacks. It's inevitable. But I think the thing that's exciting is, although that is happening in the more mature sectors, there are still many more unexplored sectors for tokenization and for blockchain infrastructure. So that's, I mean, it's exciting times.
With that being said, if we had a crystal ball and we returned to the stage in 1 year's time in Davos and we were able to discuss maybe some predictions we had that fell a bit short of expectations or what the initiatives look like, Robbie, what would you say here today that we could revisit a year from now and discuss?
I think probably the one most likely to happen between now and then is I think we're going to see a lot more retail participation in institutional investment grade opportunities through tokenization. So essentially things that were, like big private equity funds or whatever that are accessible through your neobank, mobile app. And essentially because of tokenization that they're being distributed down to that level, I think that's actually a realistic target in the next 12 months to see it on a widespread basis.
Yeah, and an exciting proposition at that. And Dave, I'll let you have the last few words of what you see coming to fruition in the next year that we can discuss in 1 year's time.
I really like Robbie's. I wish I could have taken that one. But I do believe that after a lot of hype and excitement over the last few years, I think capital is going to start to become more patient. And there's going to be investments that are made into sustainable, not just business practices, but also business models as well. And you're going to see this as the bigger corporates and financial institutions become much more involved into this space. So as they adopt this further, and you start to see tokenization become a normal thing where the financial institutions, they have to adjust in order to survive within this change, you'll see that capital becomes much more patient, which I think is maturity for our industry, and I think that's a positive.
Yes, wise words. Well, the future is bright, and we are here to celebrate that. So, Robbie, thank you so much for joining us. And Dave, always a pleasure chatting. Thanks again.
Thank you.
Thank you.